All right, guys, bang, bang. I've got Will and Willie here with me. There's a lot of W's in both of your names. I'm super excited about this. I feel like Willie is the OG of on-chain metrics, and Will is fast becoming one of the crucial pieces of information in the market on on-chain metrics as well. Willie, thanks so much for joining us today.
Yeah, thanks for having me, Pomp.
Absolutely. Let's just start with maybe you can introduce yourself and give us a little bit of background in terms of why you got interested into on-chain metrics and kind of maybe what you look at on a day-to-day basis when you wake up as a signal for what you think is kind of the most important metrics.
Yeah, okay. I got into Bitcoin in 2013, kind of coming from a tech background, startups, always into tech and data, and that's what appealed to me in Bitcoin, more the tech side of things. And as I sort of delved past all the tech, we had this blockchain, and I started looking into what was, data in there, trying to draw conclusions from it. And that ended up becoming a field in its own right. I started in on-chain analysis in 2016, kind of put out some of the first on-chain indicators like NVT, sort of 2016, early 2017. That's how new this whole field is. And now something like 4, 5, 6 companies dedicated providing this kind of data to investors now. So when we're looking on chain, it's really a look into the fundamentals. It's the fundamentals of what investors are doing with their capital. You can see them come in, you can see their movements, you can see the age of coins, you can see, new people coming in to buy or new people selling, and you can draw kind of conclusions. Like if you see a whole lot of new people selling into a dip in a bull season, you kind of know that those are the weak hands being shaken out. If you see a whole lot of old hands selling all of a sudden, then that's a little bit more serious because they're more experienced. So that kind of gives you an idea of what we're looking at in on-chain. It's looking at these fundamental movements in capital from real people, less the technical analysis, which most traders use, which is essentially just tracking the price and volume movements on exchanges and trying to draw all sort of metrics around that. Ultimately, the fundamentals prevail over the long term. Short term, the technical analysis is more, I'd say, timely. You can time markets in a shorter time frame, but I've seen many times in the Bitcoin market where the fundamentals say one thing and the technicals say another, and I've never seen the fundamentals fail actually. So when I wake up and I check the markets, I usually check flows going in and out of the exchanges to give me an idea of the buying power or the selling power of real investors rather than just the traders. I also look at, one of these metrics that Glassnode do is what they call liquid supply, and that's really a qualitative view of the market where the coins are moving between strong holders or weak holders. I use that a lot, just to give me an idea of, who's buying or selling, and those two combined give me a very good readout. And then there's about, 20 other indicators I might look at depending on the time and the structure of the market. Glassnode have about 300 to 400 charts. So ultimately, usually all of them get used throughout a macro cycle. It's just different times. Like obviously right now with China banning their miners, looking at the hash rate on the network, the speed of the blocks processing, the miners' wallets, that sort of comes into play. So it's just kind of, it's an ECG, I think. It's like a readout of this entire animal called Bitcoin, and you can look at it in 200 different dimensions, and on-chain analysis gives you that.
Willie, I want to follow up with this thread you put out. Maybe you could just kind of break this down for listeners. There's the one you put out yesterday. You're looking at the supply shock ratio, liquid supply ratio, and then also exchange flows. I guess we could just kind of get into real quick. What exactly are those metrics showing, and just kind of getting into this whole like re-accumulation phase that we've been kind of describing.
Yeah, okay. So I measure supply shock in 2 ways, a quantitative view and a qualitative view. The quantitative view is really just the speculative inventory that's sitting on exchanges. So you can draw a pretty easy conclusion that the supply sitting on exchanges are the coins that are able to be bought. Admittedly, some of them are long-term holders, particularly on Coinbase, where noobs sort of, and particularly retail, store long-term their coins. But mostly the coins on exchanges are speculative coins. And what you can see is as coins deplete off that inventory, there's in effect a supply shock. So, that's been the story of this last 12 months. Ever since COVID hit the economy, we've been in the supply shock setup where the inventory on spot exchanges are slowly depleting, and that means that's less and less coins able to be bought. That puts a bullish price pressure on. And in this latest pullback, where we pulled back from the 50, 60,000 range into the 30s, you could also see a massive flow back into the exchanges. So a lot of supply being put back onto the market. So that's reverse supply shock. But what we're seeing very recently over this kind of sideways band is actually those coins moving off again. So we're back in this sort of supply shock trend upwards. And the other view of it is actually it's an indicator you created, Will. It's a ratio of like glass nodes measure, like I was mentioning, of liquid supply. Essentially, I call it Rick Astley. You've got two types of people in the market. There's the speculative guys that you can look on their wallets and you can look at their history and see that a lot of coins move in and out of their wallets. They are in the game to trade more than most. And then the other side is the investor that stacks their coins, and not a lot leaves from those wallets. And I call those guys the Rick Astley. Rick Astleys of this world. They're not going to really let go of their coins. So when you draw a ratio between the two, which what you did actually, you can create the similar thing, but it's based on the quality. Like as more coins flow into the strong hands, the Rick Astleys, versus the speculative hands, you'll see the same sort of supply shock. The speculative hands are willing to sell their coins, whereas the Rick Astleys aren't. They're holding and they're not going to let their coins go. So as the strong hands gain more and more of those coins, there becomes a supply shock, and the coins held by speculative hands is reducing. So I look at that, and in both cases, whether it's the inventory on spot exchanges or the qualitative view of coins held by the strong hands, they are really moving towards long-term holders, moving off exchanges. And we're, if you look at the qualitative view, we're really making near highs again. We're back in the zones where Bitcoin was trading $55,000, $60,000, and that's continuing to climb. So it's a very interesting time in the market right now where the price is divergent from on-chain. The price action and technical view of traders are thus selling down. There's a lot of shorts in the market, and it looks very kind of like a bearish grind. Meanwhile, the on-chain picture shows a lot of accumulation, like very ridiculously strong accumulation that is not reflected in the price action. And we last saw this in the months before kind of October, where price had been ranging sideways. It pumped up to 11,000, 12,000. People got really bullish, and then it dumped down to 10,000. And so the trajectory was downwards and sideways. And all through that time, the supply shock was steeply rising. A lot of coins moving off exchanges, a lot of Rick Astley controlling more and more of the coins. And that eventually exploded into a complete bullish run from November onwards. And if I recall, the narrative back then was we just had this COVID crash back in, the April May, April zone, and Bitcoin was very, very correlated to stocks. So and gold was starting to take off, and people were saying Bitcoin's a failed safe haven. It's highly correlated to stocks. It didn't hold over this this sort of bearish crash we had, but the actual on-chain picture was completely different. It was at that point long-term investors were stacking. They were stacking hard. Supply shock started climbing straight up from that point. And actually, it took a number of months before the market kind of priced that in, and there was a realization that the coins were running dry. And, it took a while for the kind of speculative volumes in the market to kind of get squeezed. I kind of picture the futures and derivatives exchanges having a huge dominance over the short-term price, and at that point, the price was swinging wildly above what I would have considered there's a particular floor that investors will support, and it was trading above that, but that floor started climbing higher and higher. And around that October, price kind of met that floor estimate, what long-term investors were supporting, and it bounced, and that was when the market realized that there was supply shock, and we ran up to 40, then 50, then $60,000. So right now the structure is similar. There's a lot of bearish people in the market. The price action reflects bearishness, and underlying it, there's like this invisible, accumulation from long-term investors that I haven't seen anything like this since October last year.
It's interesting. Like, I think the key point there is kind of the fact that there's this huge divergence. And like, I've been looking at some of these charts lately, and I've been like, am I crazy? Like, cause this has been going on for so long now, and price keeps diverging from the fundamentals. But it is kind of wild. Like you said, looking at other times, I mean, at least in the last year or two, there hasn't been a divergence this large since like you mentioned, September. So just waiting for that information to kind of get priced in. But in the meantime, it's like this thing is just growing and growing and growing. Like, looking at that big uptick, in that liquid supply ratio this week was pretty wild. And then also seeing, and I guess you could touch on this if you want, the uptick in whales, where that's something I had been watching for a while. It was the number of new whales, which have been trending down, but you had actually pointed out to me that, the number of whales were trending down, but their supply that they were holding was actually moving up since that big capitulation event. So it's almost like, supply was getting concentrated into older whales. But then this week, when we had that big uptick, I think it was like 65,000 coins accumulated by whale entities in one day. At the same time, you had an uptick in new whales. So I think that was interesting to see, maybe, finally getting some new large buyers, where it had seemed like it was kind of, for the most part, kind of like older whales buying.
Yeah, I mean, like the whole rundown, like a lot of the coins that were moved between wallets, between entity wallets, different participants, they were very young coins. They came in, like in the 3 to 6 months band, where they bought in below 30,000, even 10,000. I think they were very much, this was also the time that whales were selling down. And I think that was reflective of this kind of new thing we have in 2021, where you've got a lot of hedge funds now in the game, and high net worth individuals. And we know these guys came in around the start of this year. And it's interesting, because usually in a bull run, it's usually the new guys that come in, they get shaken out, but they're usually the, what would you say? Like the new hands, the noobs get shaken out, and the strong hands and the old guys that know exactly what's happening in bull run, they snap up those dips. Whereas this time we've had like, hedge funds, which are, supposedly savvy. They're meant to be savvy. They're savvy in traditional finance. Maybe they're not so savvy in Bitcoin, they took their profits. They took a lot of their profits off the table. And so you ended up having whales, these huge whales dumping in a bull run onto effectively much smaller guys, medium-sized people and retail who are, they're stacking hard. They're buying up these coins. So the dynamics kind of flipped. It's a very weird cycle, this one. And it's interesting to see that blip now. It's more so the coins under control. And I kind of wonder if, what's your take on it? I'm wondering if there's yet unannounced news, maybe, like we know El Salvador's, in for what, 150 million in their trust fund, and they've got about 135 million that they're going to give out to their citizens. That's a fair amount of buying pressure in the sideways band. But I kind of wonder if there's others, there's like 8 Latin American countries now very kind of bullish on Bitcoin being a big thing for their economy. At least they're making noises of it. I do wonder if we've got some unannounced news that we can see on chain, but we don't know what exactly that is right now.
Willy, one of the things that's really interesting to me about all of this is as we see folks come into the market, I think most people who pay attention to this stuff have wrapped their heads around, okay, strong hands are buying, and people who have been around for a long time kind of understand cycles and look for points to accumulate. But one of the things that has changed, let's say in maybe the last 12 months or so, is we now have corporations, financial institutions, and even nation states that are starting to actually buy Bitcoin and hold it. Do you have any insight or any way to kind of think through it from a framework standpoint as to maybe the quality of these long-term holders or a difference between, let's say, an individual who's been a long-term holder, been around for a while, versus an institution, a nation state, a corporation, et cetera?
Well, like definitely the quality completely changes. You kind of tend to have much less signal coming from these kind of guys because they're very measured moves. Like if you look at Michael Saylor's MicroStrategy, they're buying kind of in bulk in separate rounds. He's actually, announcing it before, I guess, for regulatory reasons. So he kind of gets front run a bit. But once those coins get mopped up, that's just a whole bunch of supply locked away. And, there's not a lot of signal coming from his wallet, right? It's just those coins are aging. And so it's, like, in the old days of like 2016 and the cycles before that, the on-chain had a lot of dominance, and it was just a sea of participants, and you could see all the transactions on-chain, and you kind of get this, it's a lot more predictive when you've got, 1 million people individually acting rather than like 5. All right. And so I think that's a lot of signal being removed. And I don't think on-chain necessarily is useful for that. I think it's much more useful actually picking up the phone and talking to these guys in the industry, because although these coins are held by a lot of shareholders, I guess, split owners within, a corporation or even a nation state, there's a lot of vested interest in those coins. The decision power is very, very centralized. So in that regard, it starts to look a little bit like a small altcoin, their holdings. It's like these people have very concentrated power to just move their coins. And it has a huge impact. Even like things like the Grayscale a Bitcoin trust, that holds 3.5% of the coins, and you can see the impact of even the small, let's just say the way it's structured with the lockups and the design of that instrument. It has an impact on the market, a significant impact, and so. Like these entities that are very concentrated, obviously they kind of add a shock to the market if they do anything. So, I don't know if it's an on-chain thing we look at. It's likely in other data in these conversations.
Willie, one thing you'd kind of touched on, I just wanted to, kind of like circle back to. I think a lot of the capital that, people kind of need to keep this in mind. A lot of the capital that flew in or was flown into the market, towards, call it, late last year, November, December, was through Grayscale for, people trying to do the arbitrage trade. And then also, the cash and carry trade, the difference between the spot and the future, longing spot, shorting the future, and just kind of capturing that basis. I think a lot of, and I think you pointed this, I don't remember exactly who pointed this out, but part of that down draw in whales kind of coincided with the spread between the futures and spot dropping off. So I suspect a lot of those whale entities that we saw come in, kind of at the beginning of the bull run, because I remember that was a big narrative, like, there's this huge uptick in whales. It was like went vertical after we broke all-time highs. I suspect a lot of those whales weren't actually in Bitcoin for the asset itself, and we're just kind of seeing this market neutral trade that they could just take, but they had to own the underlying.
Yeah, I'm not sure how much of that impact was from the market neutral participants, to be honest, because like we saw the whales started to sell down. Quite early. I think it was around March they started to sell down. Yet, like the yields that you were getting in the cash and carry trade was climbing. It was getting very, very lucrative. The yields only dropped off after we kind of got down to the 40 and 30,000 mark, and people were interested in shorting, and the market went into backwardation. At that point, it made sense to unwind out of your position, right? And because you're not doing yield by holding your Bitcoin and shorting it anymore, it's actually costing you money. And so we did see a little whale holdings drop at that point, and I think that was responsible for that cash and carry. I kind of do think that this was speculative whales. Like we know that Ruffer bought around 10,000 and they sold a bit in the, what was it? Was it in the 30s? Something like that. And then they sold the remainder in the 50s.
And the Elon Musk pump.
Yeah, like they sold, that's right. They sold some in the Elon Musk pump, but then they sold the remainder. Saying that, I think they cited that the kids weren't going to be playing speculative games anymore because COVID was coming to an end or something like that. And then I know the New Zealand, one of the retirement funds in New Zealand, KiwiSaver, they also bought in the 10,000 and they exited in the 50 to 60,000 mark. So there's a couple of known funds that I know of, that's well publicized. And so we do know that there were funds behaving in this way, and if that's the tip of the iceberg, there's certainly a lot more whales than funds being announced that they've bought Bitcoin. So there's probably a lot of this action happening. Fund managers are highly connected. They might be copy trading more or less. So yeah, I think we did get a bit of south side, and you see that reflected in the GBTC inventory not climbing anymore.
Willie, one of the things that always fascinates me about the on-chain metrics is kind of this idea of like the on-chain metrics can't lie, right? The data is the data. How you interpret it could be different for different people, but it's this real-time, transparent view into what's happening in a part of the market. How do you think about the on-chain metrics being kind of more reactive or more of like a lagging indicator for things? So sentiment changes, then the on-chain metrics change, versus the on-chain metrics are really driving maybe sentiment or other types of activities in the market? Because it feels like there's a relationship where if you kind of zoom out and look historically, you can definitely tell, okay, at some point in the market, we saw a bunch of the metrics change, and around the same time, sentiment might have changed. But what do you think about the relationship between those two things?
Yeah, it's a good question. I mean, there's so many different metrics you can look at, and I find some more predictive than others, and others certainly lagging. And so, it's that constant search of finding the leading indicators. I think on-chain's really it's, there's short, medium, and long-term on-chain indicators. And some of the highest value you can get as an investor is the longer-term stuff, because you want to know when is a good time to enter and when, it's probably highly risked and worth taking some money off the table. And so the macro long-term indicators of on-chain is very, very useful. And whether or not you call that predictive, you might just say, look, things are getting dicey here because our on-chain models are saying that this is where the fundamentals are and this is where the price is. And when you do the ratio between the two, things are very highly speculative in a, almost mania phase. And that kind of stuff is interesting. It doesn't say the price is going to crash. You can go even higher, but it can tell you your risk you're carrying is high and it might be worth de-risking a bit. And so that's kind of the more macro side that's super useful. And then you can kind of get into the shorter time frames like demand and supply that's happening over the week to week. And that stuff, it's still pretty reliable, but it's, it's not going to be perfect because it's based on interpretation. It's based on these are markets. Anything can happen. Like at one point, I remember saying this thing is tentatively recovering. I think I'm bullish. And then, but the key thing was it's tentatively recovering. And then Elon Musk tweets about Tesla not accepting Bitcoin and validating this FUD on Bitcoin, to the mainstream who aren't very clued on Bitcoin. They're just validating this whole rhetoric that it's destroying the planet with fossil fuels. And that totally started this whole bearish run. And there's no way you can predict that, right? On-chain doesn't predict these market moves that are outside. Like that basically means the on-chain investors that we're seeing got sideswiped by some random event in the market. Doesn't mean it was wrong in saying that, investors are buying and they're bullish. It just means that we didn't pick this unpredictable event. And having said that, on the short term, when I say short term, maybe in the 3 weeks out, I do a letter and there's about 22 forecasts out now. And the backtrace is high 70s or 80% reliable. So if you're a trader, and you're trading a technical signal, typically you're doing really well. You're in the 55 to 60% accurate in your analysis. So on-chain currently, even the short time frame stuff can be predictive if you're looking at the right stuff.
What's up, guys? Before we continue with this interview, I want to quickly talk about our sponsor, Kraken. Kraken's one of the most established and secure places to buy cryptocurrencies on the internet. They've been at the forefront of the Bitcoin and blockchain revolution for over 10 years. Their mission is to bring crypto to the masses. So whether you're an OG or this is your first trade, Kraken has all of the tools that you need to achieve financial freedom. With more than 60 cryptocurrencies available, you can invest in all of the most popular projects in the industry, including Bitcoin, Ethereum, and many, many more. Kraken also provides in-depth articles and guides on every single asset that they list, so you can get up to speed quickly and make smarter investment decisions. Visit kraken.com/bangbang to get started today. Again, that's kraken.com/bangbang. All right, let's get back into this interview. I hope you're enjoying it.
Got it. And before we let you go, maybe talk a little bit just about where we are today from a market structure standpoint, kind of what are you looking for moving forward? So are there specific milestones? Are there specific things happening with the on-chain data that you'll say, hey, this is going to be a big moment. We don't know when it'll happen, but I'm looking for it. Or is it more so you just wait till the on-chain metrics develop and then analyze what kind of happens in real time?
Yeah, right now the big story is like, when does this accumulation band pop? It sounds almost funny, if you talk to people on crypto Twitter, because everyone's so bearish, saying we're in a bear market, and I'm like, this is a bull market. There's no mistaking this. Like, we've got X-ray vision on what the investors are doing, and it's bullish whilst price is sliding downwards. And I think the next major event is when the fundamentals squeeze the price action, and we we break out of this, what I'd call a re-accumulation band right in the middle of a bull market, like a bearish shock that is now being shrugged off. So that's the next thing I'm looking for. And then typically once, we usually get a few pullbacks within a bull run. This is a really weird one, a whale powered pullback. But after that, I'm really interested in seeing how the tail end of this bull market develops, because this bull market is, it's structured unlike any I've seen before. And the market of, the whole market is completely different. We've got very well developed futures and derivatives and options. And now we've got, large ETF instruments. And we've got a lot of leverage in the system, BlockFi, these kind of loans, and a lot of hidden leverage like that. So it's getting it's become a more complex beast. And I think we've already seen the way the price is moving in this epoch, this halving epoch, 4-year cycle. It's unlike anything. It's not smooth. It's lopsided, volatility all over the place. And I'm just really interested in seeing how that structures later on. I'm not predicting, waiting for some event in the end of the year. I'm more like using onchain as a map to try and get a grasp of what exactly is happening in the market. And I have no idea what's going to happen in fourth quarter. We've got like a nation state coming on board. What would that look like on chain? We've got Lightning Network with that nation state starting to fire up. And so there'll be a lot of activity locking into that and taking it off the chain and trying to see if we can get some data on that. It's kind of a wait and see and like figuring it out as it comes.
Willie, do you know any positive news is Hopium? Come on now.
Any positive news? I think we just sort of talked about it. I think the positive news right now. What's that?
I was gonna say we're the Glassnode Hopium guys.
Yeah, exactly. The Glassnode Hopium guys. I think the positive news is that there is so much bearish trolling on Twitter. Like if we can get more and more people bearish, then that'll be certainly the bottom.
I want to ask you what's the top model look like? I know this is kind of a reactive model that you can kind of gauge where the trajectory of it is going, right? But I'm assuming that's your opinion on that has changed. I know you had been kind of looking at 200-300K. I was just curious, where that kind of stands in your mind.
Oh yeah, so people like to cite that I have an opinion. Like I make a prediction. All I'm doing is reading off the model, and like I get the luxury of saying the target is a moving target because the model keeps changing because it's basically a moving average over the market cap is what it's based on. And it's hit every top in the history of Bitcoin, 12-year history. I'm not saying it'll do it this time because it's such a weird cycle, but that top model, and there's another model which frames the bottom, they give me an idea of where the top may be. And first quarter of this year, we were ranging up to the $300,000 to $400,000 range. Right now, the top model is $157,000 today. Of course, it moves. And so really it's looking, I don't know, if we squeeze out of this accumulation band like I'm expecting, I would say that we'll start curving upwards and we're in the $250,000 to $350,000 range. Sounds a bit ludicrous right now, but that's what the model says. If we hit it, don't know if it will.
Would you be looking for, I guess a few things. So like, obviously we're talking about this reaccumulation. When that kind of supply shock takes place, do you suspect that, shorts, because when you look at like funding's been negative for well over a month now. There's been a couple of days of slight positive, but in general, do you think there's a possibility of us kind of getting this short squeeze on the way back up? And then second of all, we had been kind of talking about funds that got in and 10 to 20K and then had moved to taken profits, kind of at the beginning of the year. Do you think there's a lot of there's a lot of momentum funds like kind of that will come in if we have a breakout and kind of try to ride that momentum wave, right? Like, so maybe we'll see an uptick in whales or whatever it may be. That's kind of showing like once we break, I don't know, whatever it is, the 200-day moving average, something that kind of gives capital that's sitting on the sidelines, the confirmation that, okay, yeah, maybe we were waiting for lower prices, but this thing's now broken out to the upside. So now, we feel confident to go ahead and take a position. Do you think you get that effect, or like, have you gotten that effect in the past once Bitcoin breaks out of some major resistance?
Yeah, I we'll remember in the 3,000, 4,000 band, it broke out and it really was a squeeze. I can't remember how the derivative setup at that point, but looking at the squeeze, it looked like it was primed to pump upwards if it broke resistance. Presently, there's very, very little interest compared to, open interest is very low. The number of contracts in the system is low. So I'm not entirely sure if we'll get a squeeze, but, historically we do squeeze. So squeezing meaning we get a very violent move, and this time it'll be a short squeeze because everyone's shorting, so it'll move to the upside. So I kind of expect it, but right now I'm not seeing enough open interest to see anything really very violent. But I do think you're right in that as this thing starts to pick up momentum and it shakes off all of this crazy bearishness of, not only do we have all this crappy energy fossil fuel narrative thrown at Bitcoin, but then we had on top of that China shutting down all of their mining, which will take apparently roughly 6 months for all those miners to really move that infrastructure and set it up and redeploy it. So the hash rate of the networks, I think, 40% down or something ridiculous. So there's a lot of bearishness that's been thrown on Bitcoin. It's still chugging along at, price pulled back 50%, but it's still doing well. So if we shake that out, and then we've got, you look at the picture we're seeing where we've got, sovereign wealth funds that haven't really been much of a story, but and I'm quite interested in these non-speculative hodlers at very large scales like sovereign wealth. Like El Salvador loading up 150 million for their trust. I think Singapore loaded up on some Bitcoin, but there's a number of sovereign wealth funds that I think must be looking at accumulating. Yet, I don't think we've seen much of that yet, and I think that's a story for like the fourth quarter of this year, maybe, if it happens. And if it happens, then that's going to really change the cycle, because we have that kind of buying power on typically what we'd expect to be near the end of a bull market. We could see a really different cycle. I kind of wonder if the cycle, I'm calling it different. Like Dan Howard's calling this a super cycle. I'm thinking this might be the last cycle, meaning at this point, Bitcoin doesn't see this very strongly imprinted 4-year cycle. And we do more of a random walk, and it's highly correlated to macro. And we just random walk all the way up to $1 million in a few years.
Willy, do you think that's the top? Why $1 million? Why not 10 million or 500
$1 million plus? What is it? There's no top to Bitcoin because fiat has no bottom, was it? I think that we're, the monetary base of civilization is about to be reset, more than reset, reinvented. I'm looking at this. It's like people are looking at this as reset of the long-term debt cycle, reinventing money. Money gets reinvented every roughly 100 years. And I'm like going, well, if you look at when money was invented, that was the agrarian age, So we shifted from not trading to actually using money in agriculture and all this technological advancements, and that led to civilization. And I think this is the same thing. We're going from this kind of industrial age to a digital age, but it's a real first reinvention of money since the agrarian revolution. It's a 1 in 10,000 year event. It's not a 100-year reset. So I think it's gonna the top on it is roughly 1-to-1 to world GDP and market cap, which is what, 100 trillion. I think I concur with Plan B. Plan B is 100 trillion. And that might be a quadrillion by the time more money gets printed.
It's interesting what you had kind of touched on about the cycles. This is something I've kind of thought about, like over time, obviously the supply shock has less of an effect, right? You've analogized it to a bathtub where you're sitting in a bathtub and you have that push, and then that gives it the momentum. And then obviously just market behavior, greed kind of kicks in and drives the speculative rally up throughout the bull run. But over time, that push, the pool of water is getting bigger, so it has not as large of an effect, right, on that kind of supply shock. So over time, I almost like to think of it as like the halvings got the initial kind of inertia going for the adoption, right, where it gave people a monetary incentive to come in and buy this thing because of the, just the pure monetary appreciation of it. But then it gets to a point where the halvings aren't necessarily driving people in through that supply shock, but the demand kind of just takes over the adoption, the network effects of Bitcoin. Once it has that inertia going, that momentum going, then, it's kind of just doesn't really matter as much as the pure demand from that aspect. And then, like you're saying, as Bitcoin becomes larger, as it becomes a multi-trillion-dollar asset, it's going to be much more adapt to, following kind of macro trends and what that landscape is looking like.
Yeah, I'm really interested in this last cycles because it's really I'll put some metrics to it because it's really based on what you're saying, the supply shock, right? Supply shock is what creates these 4-year cycles, and the sell pressure from the last supply shock was 1,800 Bitcoins per day down to 900. So 900 Bitcoins are being mined every day, and that's being sold off, right? That's the sell pressure. Now we're in a cycle where there's so much derivative trading that you can picture, 1,000 to 2,000 Bitcoin potentially being harvested as fees by the exchanges. And that's potential sell pressure if they're selling to pay shareholders and salaries. So the sell pressure from exchanges, like mining, it's like a tax on trade and then selling, constant sell pressure. That's already the same size as the current like mining. And then we're going to drop to 450 Bitcoins per day at the next halving epoch. At that point, it's the minuscule, the least of the sell power. Like, to put this in perspective, from Grayscale's 2% of their coins under custody for that fund, that pseudo ETF fund, generates a sell power of 36 Bitcoins per day. Probably all the ETFs combined currently is just over 40 Bitcoins per day compared to miners that are doing 900. So by the next halving, ETFs will be 10% of mining power as sell pressure. And so I want to do this thing where you add all the sell pressure, the exchanges, the ETFs, and all these kind of products that ride on top of Bitcoin that extract fees and Bitcoin value, and then they sell to fiat. I think the mining story is now going to be a thing of the past. It'll be there, but it'll be less important than these new market influences we're seeing.
I think also, like, miners are the most bullish on the asset of anybody in the space, because Bitcoin were to go away, like, all of their capex would just be deemed worthless, right? Like, all their machines would just be paperweights at that point. Yeah. So when you look over time, miners actually have a pretty strong tendency to hold their coins. And even recently, people have been talking about, miners have played this huge role in the selling pressure downward. But at least, in Glassnode's data, you're only seeing, like a little over 5,000 coins that were sold down, kind of amidst that month in there. Which in that now over the last 2 weeks, it looks like they've actually started slightly accumulating again. So, I think kind of like the whole narrative about miners selling has kind of been overstated.
Yeah, I mean, it's like, the There was a dip. That dip was, if it was 5,000, as you quoted, that was very shortly after the miner ban in China, and presumably it made sense for miners to sell coins because some of them are getting out of the game and liquidating for real, and others are selling out to fund relocation. But after that sell-off, we're in accumulation of coins by the miners, and they're not selling. And it's very much what you see with the bottom. The strong miners are left. The strong miners being the ones that didn't get shut down by China, and so they know it's a bottom because the sale pressure is gone now. So yeah, it's and interestingly the mining. It's really weird to be looking at the mining equation in the middle of a bull market. And I mean, typically the sell pressure from miners is very, very small compared to the full force of buying of a fully unleashed Bitcoin bull market. And so we're in this kind of tentative band where we're going sideways, where it kind of does matter. But normally, back to the first conversation, there's 300-400 metrics you can look at on chain. And mining right now is being pulled out of the toolkit, whereas normally we don't look at that much during a bull run. Very little signal because their sell pressure is so low in a bull run, but right now it's important.
If you don't mind, just touch on the Puel multiple, which kind of dipped into a buy zone briefly. And then as well, the difficulty ribbons, right? It's something I don't think a lot of people are familiar with.
Yeah, I am not very familiar with the Puel multiple. I remember he created it and we went over the equation, but that was like 2 years ago, and I haven't got it in my head right now.
It's the issuance divided by the 365-day moving average of issuance in dollar terms. So when you had the block slowdown. I think that coincided with why you had such a steep drop in it, because miner revenue was less because there was less.
Okay, that's it. Okay, gotcha. Okay, so that basically Puel multiple and the difficulty ribbon is very much measuring the same thing then. So what you're looking at is the Bitcoin network generates hash rate from the miners. And then that also translates into difficulty. The network makes it more difficult for miners to mine, right? And so the two things are hand in hand, and the two things are matched to keep the block time every 10 minutes. Therefore, the issuance should be roughly the same. The Puel multiple is measuring the localized issuance, and what we saw was the issuance dropped off a cliff because the hash rate dropped off the cliff, and the difficulty takes 2 weeks to adjust. And so essentially the whole network started processing blocks even up to 3 times slower than normal, and so issuance was 1/3 during those times. And typically when you see that kind of event happening where issuance is so slow, you'll see this drop, and it really is very similar to what I'm measuring with the difficulty ribbon, which is also measuring this drop in difficulty, which is a bit lagged. It lags hash rate. The hash rate's dropped, and then the difficulty will correct downwards. And as it's correcting downwards, eventually this thing bottoms, and new miners start adding hash rate into the market. And what we're really looking at is what I call the miners' capitulation. The weak miners just got liquidated. They could not, typically in a bear season, as the price goes lower and lower and lower, eventually the weakest miners who are least efficient on OPEX and electricity costs, they get run into a loss, and then eventually they exit by selling off their coins, closing down operations to pay for their losses. And so those Bitcoins get dumped onto the market. That sell pressure drops the price a bit, and then it liquidates the next weakest miners. And eventually you capitulate all the miners down until the last biggest, baddest miners that are very efficient are left. And so it's a weak miner cull. And then the strong miners know it's a bottom because the weak guys got shaken out and the sell pressure subsided. That whole sell cascade of weak miners has now ended. And the buying can begin. So they know that they're not going to sell anymore. They're going to hold their coins, and so the difficulty ribbon, you'll see the difficulty drop, and we'll see a visual compression in that ribbon, and then you'll see it recover. And there's a visual view of that capitulation event. And the Pure multiple is very much similar in measuring that. Instead, looking at it as a side effect of issuance, because it's effectively those block times and how difficulty and hash rate work together.
Willy, I feel like Will and I could talk to you forever. Unfortunately, we can't do that on a podcast or on YouTube. Before we let you go, explain to everyone the email that you put together and kind of the analysis and research that you do with the on-chain metrics, and where they can go find more if they're interested.
Yeah, sure. I launched this October last year. It was kind of a good time because it was like the start of this bull run. And the idea is really to give investors, particularly investors that are relatively new to the market, like a market intelligence newsletter to see what's actually happening with investors as we're seeing it on chain, so they can make informed decisions. Because we see a lot of investors come in, they buy, they get freaked out by the volatility, and particularly in a bull market, you get these shakeouts. So I put that letter out. I call it the Bitcoin forecast. It effectively takes all of these metrics that we get off Glassnode. I reprocess it. I add my commentary and predictions based on that, and that's available on Substack currently. So you can just go to my Twitter handle. It's Woonomic, and there's a link there to my Substack, and that's available if you want to subscribe.
Awesome. Well, listen, thank you so much for taking the time to do this. We'll make sure that there's a link in the description to send people over there. Will, any last closing words?
Yeah. Hang in there, guys. This thing's going to pop.
Will
Clemente, anything from you?
I just wanted to say, thanks for coming on, Willy. Obviously, you're very instrumental in kind of my understanding of all this stuff. It was actually a podcast you did with Peter. I think it was like in December or something. It was like right after we broke out all-time highs, and like just listening to you kind of, explain how everything was moving on chain. It was really fascinating to me. I think, we kind of get insight into activity and investor activity that you don't get in any other market. So the stuff really is fascinating, and I appreciate you, taking the time out to, communicate back and forth with me, and then also just come on. I mean, this is awesome for me. So thanks.
Yeah, thanks, Will. It's been really great to see you come in there and sort of take the torch. It's like a new generation on-chain analysts coming in and helping build up the space. So that's really great to see. Good on you for that.
Thanks, Willy.
Awesome, guys. Thank you guys so much, and we'll do it again in the future.
Okay. Catch you later.